right, let's get right into it. Today, we're going to break down a really powerful trading setup. This isn't about some fancy indicator. This comes from what I like to call pure uncut order flow. It's a high probability strategy that really pulls back the curtain on how institutional players can set these perfect traps. And we're going to build a checklist so you can see it coming. And yeah, that's honestly the best way to describe it. This isn't some random price movement. No way. This is a deliberately set, strategic trap. It's designed to sucker in aggressive traders, catch them off guard, and then use their panic to fuel an absolutely explosive move in the other direction. So let's deconstruct this thing, piece by piece. So the first piece of this whole puzzle is the environment where the trap is actually set. You gotta have the right conditions. And that place is what traders call a slippery floor. The technical name for it is a low volume node, or LVN for short, and it's basically a zone where the market can move incredibly fast. So what is an LVN really? Well, at its core, it's just a dead zone. Simple as that. If you pull up a volume profile on your chart, the thing that shows how much trading happened at every single price, the LVN is a valley. It's a huge dip where, for whatever reason, the market just didn't do a lot of business there in the past. This is the perfect analogy, seriously, because almost no trading happened there. There's no friction, right? There are no pockets of old buyers and sellers hanging around to slow things down. So when the price gets into one of these LVNs, it tends to just, whoosh, fall right through it. It's like stepping on a patch of black ice. It's a vacuum. Okay, so you've got this slippery floor where price can just accelerate like crazy. Now, the second part of the trap is what happens when a really big player decides to build a brick wall right in the middle of it. They create an immovable object, and they do it with a massive limit order. And this is our brick wall. It's a huge institutional limit order. If you're using an order flow tool like a heat map, you literally can't miss it. It glows like a beacon, this big, bright, thick line of liquidity just sitting there, waiting. This isn't some retail trader's order. This is a statement piece. And you have to understand, this placement is absolutely deliberate. It is no accident. The institution knows they're building this wall inside that low-volume node. They are weaponizing the market's own structure against everyone else. It looks like a defensive move, but it is an incredibly aggressive tactic. So, the stage is set. We've got the slippery floor and the brick wall. Now, for the moment of truth. What happens when price actually hits that wall? This is where aggressive traders who just see price falling fast, they get excited, they jump on board to short it, and they push it even lower, smack dab into the trap. This breaks it down perfectly. First, the sellers attack, driving the price down into that LVN vacuum. Then, bam, price just slams full force into that massive buy order. But the order doesn't even flinch. It just sits there and absorbs every single sell contract thrown at it. And the moment those sellers realize they can't break through, they panic. And that panic is the fuel for a violent, sharp reversal.
I love this quote because it just paints the perfect picture. You can literally watch this happen in real time on an order flow chart. All this aggressive selling comes pouring in, but the price, it doesn't tick down. That huge buy order is just consuming all of that pressure like a black hole. This is called absorption, and it is the trigger for the entire setup.
Now, to really understand why this is so dang powerful, you have to compare it to what happens in a normal market area, a high-volume zone. That's like trying to run through thick mud. Price grinds, it chops, it moves slowly. But in a low-volume node, that slippery floor, it creates this binary outcome. It's a yes or no question. Either the wall holds and price explodes the other way, or the wall breaks and price flushes straight through. There's really no middle ground. Okay, so we get the mechanics of the trap. It's pretty clever, right? But how can you actually identify this thing and maybe even trade it? Well, it all comes down to following 3 golden rules. Think of this as your tactical checklist. Here they are, the 3 golden rules. Number 1, context is king. A big order is interesting, sure, but a big order sitting inside a low volume node, that's a flashing neon sign. Number 2, you have to watch the interaction. You don't just trade this because the wall is there. You have to wait and see. You have to confirm that absorption is actually happening in real time. And finally, number 3, respect the risk. This setup is powerful, yes, but it is absolutely not foolproof. And that leads us to maybe the most critical part of this entire discussion. You have to understand the danger. This is a high-stakes play, and if you end up on the wrong side of it, the consequences can be, well, pretty severe. Here it is. This is the number one risk. What if the institution that put that big order there was just bluffing? They can pull that order at any millisecond. It's often called spoofing. Maybe they're just trying to bait other traders. If they yank that liquidity right as sellers are piling in, that floor just gives way completely.
And let me be crystal clear about this. If that brick wall breaks or just disappears, there is nothing left to stop the price. It will flush through that LVN vacuum with incredible speed. That's why having a tight stop loss just on the other side of that wall isn't a suggestion. It's an absolute necessity.
You know, when you boil it all down, this whole setup is the perfect summary of why order flow analysis is such a game changer. A standard price chart, that just shows you history. It shows you where the market has already been. But the order book, the liquidity on the heat map, that shows you intent. It shows you where the big players are placing their bets. It shows you where the market wants to go.
And so that really leaves us with a final question to chew on. When you're putting on a trade, are you just reacting to some lines and patterns on a chart? Or are you trying to understand the actual game being played by the institutions, the real players moving the pieces? Because as we just saw, understanding their traps, well, that can make all the difference in the world.